Welcome to Property Care. Today we are going to discuss about long-term capital gain. On a recently, Union budget is presented. We have seen some impact on the property sale and tax gain. There is a percentage change in that, and I got some customer inquiry saying that, so is this budget will bring down my profit or loss? So I did a quick analysis on this, recent change, presented by the finance minister. So the budget, what is the impact on the property sale? So is there any long-term capital gain, any increase or decrease in the profit, or what are all things, with respect to Indian resident, OCI, NRI, is there any impact, any change in that, calculations? So that is the idea behind today's video. So I have taken an example who is an Indian resident, is selling a property before budget and after budget. So what is the comparison? Is there any extra tax has to be paid to the government, or my tax liability is coming down? It depends on property to property. It will vary. What is the profit you show it? Main one is the in the budget, the indexation, which is the cost of inflation index. It is called, and that is being removed. So that is the main impact on the recent budget with respect to the property sale. So what is this cost of inflation index? What is the impact when I remove that from my income tax liability calculation? So that is what I'm explaining with an example so that you can easily understand, and you can do your calculation also based on this example. So if you need any queries, clarification, can connect with us. We have an auditor and we can help you to file your return. So these impact mainly coming with respect to 24-25 financial year indexation impact, post July 2024 budget. Long-term capital gain after July 2024 budget. What is the impact on property sale? So this is mainly for residential, commercial, industrial properties, and the target audience of property investors should know what is the impact. It's going to happen if I invest in a property. So owners also, those who want to sell it, tenants, those who are planning to buy, NRI, OCI, they have already properties here and they are planning to sell it or sold. What are all the impact will happen with respect to the income they generate from the sale property? So the disclaimer is, the ideas I shared it for information and the education purpose only. Any doubts on this or clarification, we can connect with an auditor. They'll help you with the more details. So I put a series of videos in YouTube with respect to property life cycle, the investment certain videos, like the difference between kata and renting or buying, we need to go ahead or continue in the rent. So plots, how to choose a plot, power of attorney, investment club, KDB investment in North Developments, and loan trap, home loan. So there are a series of video. I put it, so please watch this for more detail with respect to the investment. And I put a series of videos with respect to the rental properties also. So what are all the 10 mistakes owner makes it, tenant screening, how to make flat ready, foreigner renting out, Rent Control Act, series of videos. So please watch this for more detail with respect to the rent. So today I'm putting the long-term capital gain impact with respect to the post 2024 July budget. So what is the indexation? So the indexation is mainly for a inflation purpose. The government, announcing every year the cost of inflation index. So this is what 2001 and 2. From that date till 2024-25. So there are each year, the money value is not the same, whatever we've seen in 2001 and the current price. So proportionately, the government is increasing that with a certain number. So that is what it's called cost of inflation index. So every year there is some inflation getting increased. So money value, get decreased so that it'll increase this the number increasing because the inflation is increasing. So this is called indexation. So whenever we compute long-term capital gain, this number plays a major role. So how does that plays a role? So if I purchase a property before 2001, so there will be another one called fair market value that is being calculated. So this also there is separate video is required to explain this. So general idea is before you purchase 2001, so there will be certain value government is assigning it. So there is a calculation method. You can assume that it is a method which should be calculated which should be used to calculate long-term capital gain if property purchased before 2001. And after 2001, these are all the calculations. The government changed the method. This is called indexation method. This is each method has a small difference in calculation. So since majority of customers falling into this category, I used this. I took a one sample example, 2014, which is 240, and 2024 and 25, 363. With this, I took an example. I'm going to explain this, how this is going to be used in a long-term capital gain calculation. So with that, you can easily understand what is this all about. So the formula is the cost of purchase amount into sale year cost of inflation index and purchase year cost of inflation index equal to sale year market value. This is the formula. I took an example, an Indian resident name is Ashok. He purchased a flat in 2014-15 at the rate at a price of 73 lakhs 20,000. So this is the amount he purchased from a Purva West End apartment, Bangalore. And he sold that flat on 20th July 2024, which is before the recent budget, which is on 23rd July 2024. Our finance minister, Nirmala Sitharaman, presented the new budget. So before 3 days, he is selling his flat and at the rate 1 crore 52 lakhs 50,000. So on this price, he sold it. So for this scenario, what is his long-term capital gain with indexation and without cost of inflation index? So there are two things here. He sold it, he is selling it at this price, and with indexation, what is the calculation? Without indexation, what is the calculation? Suppose if he is selling this flat on after this date, which is 23rd July, assume that he is selling it on 25th July. So what would have been his extra tax payment he is supposed to pay? So that is what captured in this table. So the details about that narration and with indexation, he is selling before 20th July 2024. That is applies to the previous budget. So as per this with indexation, what is that his tax liability? And without indexation, so after this date, the indexation is gone. So finance minister removed it. And what is his tax calculation and liability? And the difference, what is that he's supposed to pay extra or less with respect to this criteria? So that easily you can understand. I just took one example. Each case to case will vary. So I picked up one case and sample explaining, and with that you can easily understand, put your data, you can calculate it. So this is the table which explains the difference in tax calculation with respect to indexation and non-indexation, which is removing the indexation. There is a change applied from the new budget, and that also explained here. So example here in this example, purchase price 73 lakhs 20,000. This is inclusive of all stamp duty, transfer charges, legal charges, brokerage charges. So all inclusive of this is the purchase price. The Ashok purchased the flat in 2014-15 financial year. So with indexation and without indexation, this remains the same. Purchase price, no change. So difference in pay in this column now not applicable. So and sale price. So he is selling the same property on this date, which is on 20th July 2024. He is selling at the price of 1 crore 52 lakhs 50,000. So without indexation, this remains the same. And third one is the indexed purchase price. So this is where the previous slide I have shown which is for 2014 and 15, which is the purchase year. So that is CII, cost of inflation index is 240 is the number. And he's selling at 2024 July. So 24 July is for that before the budget. So where 363 is the cost of inflation index. With dividing these two and multiplying with the purchase price 73 lakhs 20,000 equal to 1 crore 10 lakhs 71,500. So which is the indexed price before the previous budget, which is on put on the February. So that budget is according to that budget, the value is this. So now without indexation for this calculation is happened before the recent budget, which is 20th July 2024. So if you sell before this date, the indexation applies. That is why I calculated this. So the formula is purchase price into sale year cost of inflation index, which is on 24-25 is the financial year. So for that, the number is the cost of inflation index is 363 divided by purchase year cost of inflation index, which is 2014 and 15, which is 240. So that is how I took the value. The value is there in the previous slide table. I just divide as per the calculation and arrive the indexed purchase price, which means inflation applied purchase price. So according to the inflation, which is for 2024 and 25, this is the price, purchase price. So capital gain now we are calculating. So capital gain according to Income Tax Act 1961, Section 112. So this is the sale price minus the inflation applied indexed purchase price, which is this one. Minusing that 41,78,500 is the actual sale price, actual profit, capital gain, he got it. So this is the actual capital gain, and this is as per the without indexation. So our finance minister removed the indexation. So this calculation will not be applicable here. What the finance minister says is the sale price minus the purchase price equal to your capital gain, which is 79 lakhs 30,000 is your capital gain for the financial year 2024 and 25. So you will see the difference. And here we applied cost of inflation index. And here we have not applied the cost of inflation index. So that is why the capital gain profit is 79 lakhs, because the inflation we have not considered. So whatever the 73 lakhs purchase price directly minus from the sale price without inflation extra calculation. So for the tax, what is the tax percentage? Long-term capital gain tax is 20% if you apply the indexation method. If you don't apply indexation method, your tax rate is 12.5, which is after this date, whatever the property is sold, this will be applicable. 12.5% is the long-term capital gain tax. So according to this capital gain, his percentage will be 20%. So 8,35,700 is his long-term capital gain tax. And here 12.5%, which is 9,91,250 is his long-term capital gain with respect to without indexation method. So the difference is 1,55,550 rupees extra he is paying because he is not following the inflation method. So that is what finance bill says. So as per that 12.5% applied. So because of this, it would have been sold this after this date, he is liable to pay extra 1,55,550 rupees. So what the idea behind this entire exercise is, the post budget, the inflation index is removed. Because of that, the owners may or may not liable to pay more taxes. So it depends on property to property. Suppose if you have a higher capital, high margin, you sold the property for a good rate. So in such case, So you get more profit from that. Government also takes some money from that. So that is the idea here. It is simplifying the process they are telling, but if you eventually, if you see, usually owner will spend more money towards the tax, which is long-term capital gain. So that is what explained here. And lower tax value registration, will increase your tax liability. So I've seen people saying I'll do registration and government value. So you can do government value, but when this kind of calculation comes, whatever your sale deed plus your stamp duty and transfer charges, all those things, if you try to sell after 10 years, so the 10th year sale value minus current your government value. So that is getting minus. So on such case, you get a higher tax liability when you file IT return. So general recommendation, use the market value so that your sale deed value will be higher. So that is what you will be using when you file IT return. So that is the point which I am trying to explain. Use the market value rather than the government guideline value when you register. Of course, your stamp duty will go higher. Yes, that can be calculated when you arrive your purchase price. That's what mentioned here. So your stamp duty also you can add with your sale deed value. So altogether is what they calculate here. And there are some people doing black money transactions. Government want to reduce that. That is also one reason to introduce this. So whatever your cash transactions will not be accounted anywhere in your long-term capital gain tax calculations in future. So if you are an Indian resident, 1% TDS will be deducted and will be paid to owner's PAN number, and then only the registration will happen. Suppose if it is an NRI, long-term capital gain TDS remain unchanged. There is no change. According to the section 195, 20% is the TDS plus cess and surcharge. If it is short-term capital gain, suppose if you are selling a property within 24 months, on such a case, your property tax TDS 30% plus cess and surcharge if you are selling within 24 months your property. So that is the calculation we supposed to follow as per the income tax law. So was a new change. So I want to just to share with my customers and my viewers. So that is the idea behind this calculation. So you can also take your approximate value if you are planning to sell and try to arrive this number. Similarly, if you sold already before this budget date, with indexation, which is an inflation added, number, you can calculate it and you can arrive your income tax liability with respect to long-term capital gain. On top of this, there may be some other incomes like shares you are selling or a bond you are selling, mutual fund you are selling. There is a different calculation. So this is with respect to the property I am talking. Those incomes can be added with this your salary income. Altogether, you can add and arrive into your net tax liability. So that is a separate calculation. This I am talking with respect to the indexation. So our finance minister removed the indexation. What is the impact on property sale? So that is the main point I am discussing here. So I hope this gives some basic idea about indexation removal. How does that impact as a owner, when you sell a property? So this is our vision, what we do, here, and property management and real estate services, buying, selling, renting. We are planning a franchisee on the, business model, which currently running successfully. And we are building a SaaS product, is a mobile app, which will help to enable the franchisees. And this is our service catalog, what are all we do it. It's self-explanatory. You can go through it. If you have any doubts, you can connect with us. And this book I'm writing mainly for traveling guys, NRIs, what are all the like this kind of tax liability issues and how to choose the property, investments, portfolio management. So remaining, there are so many other things I'm talking for a remote owners. So this will be going to help to them. I'm going to release this soon. I'll update in our social media. So we have some requirements also on the resource front. So franchisee business consultant we are looking, and social media marketers, high ticket closers, manpower consultant, hybrid, full stack developer and lead architect. So we are looking something like a value delivery based partners. So how much ever value you deliver and you will be paid accordingly. So if you do a higher value delivery, then obviously will be the higher payout. So it is a value based and fixed price project is what we are looking. Those who are interested can connect with us and we can work collaboratively. So thank you for watching. I hope this gives some basic idea about long-term capital gain with respect to the new budget which presented by our finance minister. So if you like this video, please give thumbs up and subscribe and click the bell icon for more videos. And if you have any property management requirements, you can connect with us. This is our numbers. You can ping us. We'll help you to support your property management. And if you like this video, please share it with friends and family who wanted this kind of an information, or your friends maybe sold your property recently or planning to sell in subsequent months. So this will give an idea how much they're supposed to pay tax with respect to long-term capital gain. Thank you for watching. Thank you. Bye-bye.